So last night before the Tattoo Chef earnings came out, I did go to the cinema. I went to the cinema to go see The Fear of Purge, which is supposed to be a scary film, but if I'm being honest, the scary film wasn't on the big screen, it was the Tattoo Chef earnings. They were a horror show, and today we are going to go through these Tattoo Chef earnings and see what went wrong for Tattoo Chef, because without doubt the earnings were definitely a disappointment from the numbers that I talked about a few days ago, and we'll kind of go through these earnings, the good and the bad, because there was some good points in there. There's a few little hidden gems and we'll go through all them today, but as well as that, without doubt we'll go through some of the bad stuff that was in them earnings. At the moment the stock is trading down about 7%. I think when the earnings did come out the stock was down 10%, but a few people are starting to buy up that little dip, and I'll talk as well towards the end of the video what my plan is with Tattoo Chef. So Tattoo Chef just flopped. It was a big flop. The earnings were definitely a bit of a miss. If we go into Seeking Alpha, the EPS was negative 0.65, which we said was when I did it a few days ago that this could be anywhere, and also there was a one-time charge in there, so I'm going to ignore that a little bit. Revenue was 50 million and we were expecting around 54 million, and that was still a very healthy increase of 45%. It was just a very big miss from what we were expecting, and there was a little bit of an update in the outlook, and revenue pretty much stayed where we were expecting, which was good. And there was also an update in the second facility that I have Carsten that it will not impact 2021's revenue. It will be in 2022 where we see the benefit of that new facility. So let's have a quick rundown of these numbers and where it kind of went wrong for Tattoo Chef. Obviously the revenue was way below what we were expecting. Now the thing is I've got Q4 here. Q4 put in 39 million, 4,300 stores and 23,000 points of distribution. Now if you look at Q4 to Q1, this was a massive jump. If you remember correctly, when we looked at Q1 back in April time I believe it was, we were actually really impressed with Q1. The Q1 was a very impressive quarter, and when you look at the jump there, you can see there was a massive increase quarter over quarter growth. Now it is important to kind of compare it more to year over year, because there can be a little bit of change or fluctuations because of quarter over quarter. I don't really like doing too much quarter over quarter growth, but sometimes I do want to see just a nice, that it's kind of staying in line. Sure, it might flatline a little bit and then jump up next quarter, but I don't want to see a jump and then a bit of a decrease that's a big amount. And if you look here, 39 to 53 million was probably, Q1 was probably way too strong. You know, we were kind of expecting about 49 million, and because we got 53 million, Q1 was a massive beat. And that was probably one of the big things, is that because we had such a big massive jump in Q1, which was probably better than what we expected, it did kind of create very high expectations going into Q2 that we would carry on seeing a little bit of a jump in the revenue. But kind of why we did it kind of expect that is because when we look at Q4, we had 4,300 stores and then we jumped to 6,000 stores. So looking at that, there was a 2,000 store increase, so you would pretty much hope that, okay, if you've got more stores, basically, sure, it's not guaranteed that you're going to have an exact increase in revenue, but if you're increasing the amount of stores by 2,000, you're probably going to see some jump in the revenue. And also on the points of distribution, we saw a big massive 10,000 increase there. So when we looked at Q1 numbers, we did expect an increase for sure, but the thing is it was probably better than what we thought, but still a very good quarter. Q1 was good. Going on to Q2, we actually hit 50 million, so we actually decreased a big amount. And obviously, like I said earlier, I was kind of expecting somewhere between 54 million and 60 million. Now, even at 54 million, that's just a slight increase. And when you look at what stores we did, we actually went from 6,000 to 8,000 stores, which is, once again, a 2,000 jump in stores. So we have the 2,000 jump in stores, we have another massive jump, 17,000 this time, points of distribution. You're starting to think here, if we jump 2,000 stores, you are expecting at least 53 million. That's a given. So that was probably why, yeah, we don't want to look at quarter over quarter, but even realistically, this was actually a very poor quarter. And the thing that was actually probably a little bit even more surprising how bad it was, is that we actually had a 4.3 million contribution from the new foods in Mexico. So obviously with that purchase that they did, and that also helps revenue, that wasn't in the Q1 and Q4. So actually if we take that out and compare it actually realistically quarter over quarter, our Q3 would have actually been, if we kind of run it off without the new facility, which helps in this quarter would have actually been 46 million. So 46 million is very, very poor, because 46 million is a massive decrease from 53 million. So yeah, overall this Q3 number was a poor quarter, because I'm taking out this New Foods Mexico out of it, which wasn't there, to make it fair. And you can see here, this is a massive below part of where the revenue should have been, and there's no other way to hide it. I'm not going to hype up a stock, and I'm investing my money into this one. And if I ever see a company that I invest in not delivering, I will call it out. And right now I'm calling it out and go that this quarter from Tattoo Chef was not good enough. That revenue was not good enough. Now, actually, in the earnings call from Sam Galletti, we actually didn't get, even a couple of analysts were trying to, go, what was it then? What is this drop off in revenue? And even then, we kind of didn't get much information. They went on to say about Club quite a bit and special offers with Club, and that there kind of wasn't that many in Q2, and they'll be back again in Q3 and stuff like that. But yeah, there wasn't really a clear kind of like, oh, we had a major problem getting some products to Target, or massive amounts of our Costco sales dropped. There wasn't a clear information about what happened there, but something happened in these earnings report that we don't know about to have a massive drop off from 53 million down to 46 million. And also the thing is, a good job they bought the New Foods of Mexico, because that covered it up a massive amount. So yeah, on revenue, it was a massive disappointing quarter, and I will tell you straight away, I was disappointed with Tattoo Chef, and I was disappointed with their earnings, and I will not try and hype up a stock. If I'm here to just make money in the company, and if I see something bad, I will tell you. And the numbers were poor. They were generally probably a 3 out of 10, arguably probably one of the worst earnings report from a company that I own this earnings season. Now, that is the negative stuff, and I wanted to get that out of my system, and we'll go to some of the positive stuff, because there was positive stuff in the earnings report. So the positive stuff and the little hidden Easter eggs that were in here is that I said that 4.3 million Foods of New Mexico contributed to the revenue, and that what also didn't help it look as bad as actually how bad it was, is that actually only came in halfway through Q2. So actually in Q3, the New Foods of Mexico could contribute somewhere between 8 million on the Q3 line, which is positive. So obviously we've got 4.3 million in Q2. Q3, that could do even more revenue contribution, which kind of says that maybe in Q3 we do have some better numbers than 50 million. So that's a little hidden gem that will contribute to Q3's revenue, which should be good. There was a little bit update in Q3 of the amount of stores that we were going to go into. So obviously we've gone 4,000, 6,000, 8,000. We are going to be in 12,000 stores at the end of Q3. This was actually, we were expecting actually to be in 10,000 stores by Q4. So we are way ahead of schedule, which is really good. So to be in that amount of stores, you would hope would contribute to sales. Now I say that because I would think that 6,000 to 8,000 stores would have contributed to revenue improvement quarter over quarter, and it didn't. But this is a very big increase here. So I am hoping this translates to revenue, and I will be watching that very closely next quarter. But with the jump in stores, you would think that as you keep growing stores, the revenue will increase. So that's a good thing, I hope. The distribution centres went from 48,000 to 79,000 as well in Q3 is what we're looking for. So once again, that should also help. The other little things that were in here is that obviously we had 45% revenue, which is 50 million. Obviously 50 million was poor, but let's not forget 45% revenue growth is still very good. If we're actually going over a year-over-year point of view, 45% revenue growth is fantastic. Okay, it's just that we had, after Q1, we went in with quite high expectations, and obviously they've not been delivered quarter over quarter. But if we do take it from a year-over-year point of view, it's still very good growth. So don't write off that it was a quarter where you're like, oh my goodness, it's time to panic. The actual growth was still very strong. It was just that we were hoping for a little bit better. Now, some more little hidden points that were in this kind of earnings report is that obviously we talked about there's more stores. There's still very good growth. EPS, I don't worry about. I saw a few people attacking them because of the EPS side of it. EPS side of it, I don't worry too much when you're in this kind of hyper growth stage that Tattoo Chef are in. There's a lot of expenses going on because you've got to imagine if you look at the stores right now, they've gone from 4,000 to 12,000. Doing that ramp up isn't cheap. You've got to pay for the facilities, obviously the new foods in Mexico. You've got your inventory, you've got more staff to take on, the machinery. There's a lot of things that you're going to have to put in to keep on scaling. While it's in this sort of stage, I don't worry personally about the EPS. That's something I don't worry about. That will be something I worry about a little bit further down the line. And yeah, you'll see me quite a bit with these sort of companies is that I kind of ignore it quite a bit because there is cost to kind of ramp up. So I saw that being used quite negatively to Tattoo Chef. For me, that wasn't a worry in this earnings report. Next thing, long term, not quarter over quarter. So the big thing as well is I've seen quite a few people, and it does always happen where people seem to say that, oh, I'm a long-term. Now, you might be a short-term investor in this one, but I'm going through a long-term investor point of view. And I do see this quite a bit where people go, yeah, I'm a long-term investor, I'm investing for 2, 3, 4, 5 years. And then we have one quarter which is a little bit not on point, and everyone goes, oh, this is rubbish, I'm selling out this company. And you're like, hold on, you're a long-term investor for 2 to 5 years, and then all of a sudden you have one quarter and now you're panicking over that one quarter. If you're a long-term investor, you don't worry over one quarter. You take the big picture of what's going on. Big picture of what's going on. The company's still growing. It's growing at a really good rate. A lot of new stores, a lot of new deals. And sure, there's one quarter that was a little bit poor, but as a long-term investor, you shouldn't judge a company that you're investing in over one quarter, because one quarter, there's always going to be that little risk. Obviously, it's good to see your company smash EPS and revenue, but there's always that risk of one quarter where it goes wrong. Because one quarter, there's just little things that can be out of your hands that you can't deal with. I used to run a company online, and there would be times where I would go to 1 or 2 months where the sales would dry up, and then boom, next month, when you know it, I have the best month of the year. And that's what happens. That's why quarter over quarter is a very short-term thing and shouldn't invest you too much as a long-term investor. It's good to get a little update on the company still doing the right things, but it's more a better thing to judge it over a year period, 2-year period, because you don't take them little short-term fluctuations on the company. So I'm seeing a lot of people starting to judge a long-term investment over a short period, which is if you're a long-term investor, do not do that. You've got to invest over long-term. If I invested for long-term, but then I had little short quarters that affected me, I would have panic sold 1 million stocks by now, because this is the thing, earnings is a 50-50 shot. I always say earnings is 50-50 and a lot can happen. That's why I don't play earnings. If I was to play earnings and bet that all my stocks would smash it and go up, I wouldn't be making too much money, because earnings are 50-50, and this is an example. There was some good stuff in here, but at the same time, there's always that little risk that maybe some little numbers are missed. But we go for Q3, and then we see what Q3 happens. And what happens in Q3? We might have a very good Q3, and everyone kind of goes, oh, actually, maybe I should have held that company. So yeah, don't judge. Big thing that I'm seeing it now is people judging a long-term investment over one quarter. Don't do that for sure. A little other thing, so I'm glad you dropped this in. A very, very little subtle drop in the conference call. They are looking to acquire another company. We'll see what happens there. Obviously, they've acquired New Foods in Mexico, but they are looking at buying out another company. So we'll see what happens there. Probably the biggest gem, and I saw everyone miss this in the conference call, but basically they went on to say that the amount of SKUs in stores is going to go from an average of 4.4 SKUs in every store to 7.7 SKUs in every store, which is huge. So imagine you go into a Target, you walk into your Target, you've got four SKUs there on the shelf. Now we're going into Q3, there's going to be 7 SKUs on that shelf. That's massive. That shows how much they're having to ramp up the production, but also now the more choice they're going to have, and hopefully that will translate into sales as well. So that was a very good thing. That was probably the best part of the conference call. That was a little head-in gem there, and that's why I love listening to conference calls, is just to pick them little things up. Online sales, there wasn't much mention of online sales once again. There was a little bit of a mention that they're doing a subscription package, which I'm sure we had back in December time, so I don't know what's going on there. but there wasn't much update on how much online sales are growing, what the plan is to do with online sales. Because the thing is, for me, is a company like Tattoo Chef is they want to be pushing these online sales, because online sales, you don't have to go to Target and Target take the cut. Online sales, you have so much better margins on it. So yeah, I would have liked to hear once again about online sales, but there was nothing. And I always go, let me get on the conference call, let me ask them, let me ask them and let me know what's going on with the online sales and what the plan is. But there's nothing. So that was the only one of the little negative that I missed out that I should have put on there. But overall, yeah, Tattoo Chef earnings, actual like revenue numbers wise, was definitely poor. I was expecting a lot better. Like I said, I'd probably give it 3 out of 10, and hopefully it's better next time round. But there's no way around it. It was a poor quarter. In the long term, am I bothered? No, because I look at the company and think, obviously it didn't happen this time, but you'd expect more. Going on to Q1 to Q3. We're going to be nearly double the stars, so you would expect at least above 53 million in Q3. If we don't get above 53 million in Q3, then I would get slightly more worried if we start going over a 2-quarter period. But overall, it's just a short-term thing, I think. Obviously, you're going to have more money for the new foods in Mexico, so that should help Q3 massive, as well as the stores. As well as that, you're going to have 7.7 SKUs in every store rather than 4.4. So you'd think more SKUs in every store is once again going to help sales. So yeah, overall, the little actual side little things that were going on here was actually very strong if you were looking for them. Obviously, it's just the numbers that were poor. So I'm going to go into Q3. I'm still very optimistic, because I think when we have all this playing in Q3, they've got to beat 53 million. Come back to me if we're in Q3 and then we don't beat 53 million, then come back to me, and then I'll be slightly more concerned when we go over 2-quarter period. However, going into Q3, I just can't see for me, they've got to beat 53 million Q3, because when we have the new foods Mexico, double the stores of Q1, and also the amount of SKUs in every store doubled. Q3 is probably a bit more of a bigger one for me. If we were to see worrying numbers, then I'd be slightly more worried. But at the moment, I'm just putting this one down to a bit of a short-term kind of hit where something kind of happened, and it happens quite often in business. Maybe just maybe there was a quiet April in there, or May or something, and sales were a little bit more down. Maybe a little bit more was pulled forward into Q1 that was taken out of Q2. Overall, like I say, I'm not worried too much about it. Sure, I'm very disappointed on the numbers, but the little things that were in there for the long term were still there, and I'm going to judge the company over a long-term period rather than 1 quarter. So yeah, that's my thoughts on Tattoo Chef. Buying wise, at the moment I don't have any plans to buy any. I think the stock's going to drop down to $18. My average is $17. For me, I don't want to buy any more Tattoo Chef unless I get round to the $17 mark, and then you'll see me buy. So off these earnings, even on this drop at the moment, I don't have any plans to buy any. It will need to go lower for me to buy some. But yeah, overall, hopefully that was a little bit of a good recap into Tattoo Chef, and hopefully it was useful. If you could smash the like button if you're new, subscribe, and I'll see you next video.